Yesterday, the Federal Reserve cut rates. Let's dive into what that means for you. The Federal Reserve has a dual mandate of keeping prices stable and maximizing employment. What they did yesterday was cut the federal funds rate, which is the rate that banks charge each other for overnight lending. When the Fed raises or lowers this rate, it trickles into other parts of the economy, things like credit card rates, mortgages, and also things like high yield savings account rates. So why did they cut rates? The short answer is unemployment is edging higher and growth is losing steam. Cutting rates makes it cheaper to borrow, stimulating the overall economy from businesses to individuals as well. What you really want to get smart about when the Fed is lowering rates is making sure that all your cash is parked in the right buckets. We want to break things out into short-term reserves like emergency fund expenses and upcoming shorter-term purchases. While this should stay in a high-yield savings account and the rate will lower a little bit there, it still makes sense to have that parked so you have easy liquidity. Another area that you'll want to focus on is that debt refinancing could become more attractive given the lower rates. Looking at refinancing mortgages, car loans, credit cards. Lastly, stocks sometimes get a short-term boost, though in this case, the market priced in a lot of these movements already. What to expect in the future is yesterday they did hint that they would be looking to lower rates a few more times this year as well. However, this depends on how the economy reacts to what's going on. The biggest takeaway for investors is to make sure that you're being smart about where everything's parked. It's really important to revisit how much cash is really needed on hand and get the rest to work in longer term investments. Book a call with one of our advisors and they can chat through making sure your cash is in the right buckets and looking at that debt refinancing should it be applicable to you as well.